us now to talk markets. Andrew Slimmon is Senior Portfolio Manager at Morgan Stanley Investment Management. Just sentiment-wise, Andrew, 2023, most hated bull market in history, and it turned out to be a great year. Now people are kind of accepting things. Will we have a repeat of such a friendly market, or do you think it's an election year. Normally that happens. How are you macro? And then we'll get into some of your individual names.
Look, bull markets are born out of pessimism. That was last year. Unfortunately, what happens in the first year off a bear market low is the market goes straight up, never gives anyone a chance to get in. Right? The second year, markets grow on skepticism. I think that's where we are. And people are succumbing to the fact that maybe we're not going to have a hard landing. And retail flows have flipped positive. And that's what usually happens in the second year. But unfortunately, you don't get an easy year like last year. I mean, I know it's one thing to say easy year, but if you stayed invested, the market went pretty much straight up last year. It stampeded the bears. It's not that easy. So I think it'll be a good year for equities, but it's going to come with more volatility, I suspect, later towards the summer.
I don't know how many times last year we talked about that the lows were not in because we had to revisit the lows and maybe set some new ones. And just about every single person we had on said that. And it never happened. We don't talk about them because they were all wrong, every one of them, except maybe two or three. Which ones what stocks do you think we ought to be buying here, Andrew?
Well, I mean, you've had a big move in some of the tech names, but I think, as you just in your previous segment, look, there's a lot of fiscal spending coming, and that's going to help the infrastructure plays. So we like stock like CRH, which is a cement company. I think that's good. Although the chip companies, look what Applied Materials said the other day. As they build up all these chip plants, there's going to be a big demand for semiconductor equipment. So I think there are areas of the market. One of the things, Joe, when you talked about last year, the dichotomy about last year is, as a portfolio manager, I kept hearing companies say, business is good. Business is good. And then Wall Street said, no, it's going to get bad. It's going to get bad. It never did. And so what I see is that earnings are coming in. The earnings for this year next are higher today than they were at the beginning of the year. Earnings are stronger than what people expected. And I think that's really going to support the market here. It's tough to build a negative framework.
Well, we always heard that, historically interest rates are still not that high, but it was such a rapid change off of zero that it's definitely going to, impact things, and it's going to slow things down. I'm not sure anymore. We normalize rates, and for years we saw businesses flourish at 6, 7, 8% rates. And so why did we think it wasn't going to be possible this time? It was because of the change from being so low for so long. But companies are doing fine.
That's right. And then you layer in the fact that companies are being very stingy with their cash. They're buying back stock. They're not making a lot of frivolous acquisitions. And that's, very accretive. Stock buybacks have worked very well the last year and a half. So I think it's a good environment. I just worry a little bit. It's been awfully easy to make money in stocks. We're up 23% off the low in October. Somewhere along the way, there's going to be a bump. And, maybe it's that now that every economist thinks we're going to have a soft landing, maybe that we'll get some print that will scare that. I don't know, but I just know there's more volatility.
Well, like you said, you keep saying it was easy, but then you point out that if you listen to the people that were on this network all through 2023, it wasn't easy because none of them wanted you to be in the stock market. Huh?
I was on number of times saying the market's going up.
All right. You were one of the few, Andrew.